So good evening everyone. Now we are going to see cost accounting June 2024 suggested answers. So first we are going to see section E. Choose the correct answer from the given alternatives. So DAS is a method of dealing with overrates which involves spreading common cost over cost centers on the basis of benefit receipt. So this is based on we already having some overheads incurred, that is common cost, and we are going to apportion it. So the option should be overhead apportionment. Second question: which of the following CAS deals with the principles and methods of determining the production and operation overheads? So production and operation overheads is dealt in cost accounting standard 3. So the correct answer is B. Hotel Dream House is having 250 rooms, of which 70% are normally occupied in summer and 40% are occupied in winter. So this is the problem based on operating costing. So period of summer and winter to be taken as 6 months each, and normal days in a month to be assumed to be 30. What is the value of total occupied room days? So we need to calculate total occupied room days. So first we need to segregate summer and winter. So in summer we have 6 months and each month is having 30 days. So 250 rooms totally. So first 250 rooms into 6 months into 30 days. Here occupancy for summer it is 70%. So 70% I am taking, plus during winter again 250 days rooms into 6 months into 30 days, and the occupancy rate is 40%, so into 40%. So if I am calculating this, so 250 into 6 into 30 days into 70%, so 31,500. Same formula I'm applying for 40 percentage, so I'm getting 18,000. So 31,500 plus 18,000, 49,500 room days. So option D is the right answer. In which of the following methods of pricing cost lag behind the current economic value? So which method of value of pricing they are asking? So if I am taking replacement price method, it will be showing my current price as my issue for all my issues. So weighted average also it will show more or less approximately, but before we will be taking whatever the quantity we reserve first, we are valuing that one. So option C is the right answer. A lorry starts with a load of 40 metric tons of goods from station A. It unloads 16 empty in station B and the balance goods in station C. On return trip, it reaches station A with a load of 32 empty loaded at station C. So the distance between A to B, B to C, and C to A are 40 kilometers, 60 kilometers, and 80 kilometers respectively. On the basis of above information, commercial MT-kilometers are. So here we need to calculate commercial MT-kilometers. So for calculating commercial MT-kilometers, the same kind of problem we will be having in operating costing in our textbook. So for calculating commercial MT-kilometers, first we need to calculate um, average of weight, that is for uh, say station 1 it is carrying about 40 kgs. So weight is from till station A it is carrying 40 metric tons, and here it is unloading 16 empty in station B. So the remaining will be 40 minus 16, so 24 empties only it will be carrying. right? So from station A, it is carrying 40 empties. It is unloading 16 empties in station B. So here I will be having how many empties of weight? That is 24 empties of weight. So here I am considering plus 24 plus in 32. Again I am loading a weight of 32 empties loaded at station C. So plus 32. So the average weight will be divided by 3. So 40 plus 24 plus 32 divided by 3. Average weight is 32. Weightage into kilometers. Now I have how many kilometers from A to B, it is 40 kilometers, plus B to C it is 60, and again C to A it is 80 kilometers. So I am adding all the three weights. So 40 plus 60, 100 plus 180. So into 180. So 32 into 180, I will be getting 5760 MT-kilometers. So option B is the right answer. In your next sixth question, in a process of 800 units are introduced during 2023-24, 5% of input is normal loss. So closing work in progress, 60% complete is 100 units. So 660 completed units are transferred to next process. Equivalent production for the period is dash. So the same kind of question we have in our textbook in multiple choice questions. So you can refer to that. So here I want to calculate only equivalent production. So what is the equivalent production here? We have completed units, that is 660 units totally completed. Plus here closing stock in the 60% is completed. So out of 100 units, it is equivalent only to 60%. So 100 into 60%, we will be having 60. So 660 plus 60, 720 units. So option D will be the right answer. Then following information is available. Opening stock 4,000, closing stock 6,400, material consumed 31,200. On the upper basis, what is inventory turnover ratio? So formula for inventory turnover ratio is equal to materials consumed divided by average inventory. So average, first I will be calculating average inventory, that is opening plus closing divided by 2. So 4,000 plus 6,400 divided by 2. So 10,400 divided by 2, I will be getting 5,200 here. So my material consumed 31,200 divided by 5,200. 31,200 divided by 5,200. 6. So 6 times. So option C is the right answer. When PV ratio is 20% and margin of safety is 30%, profit is dash of sales. So margin of safety, we have a formula called profit divided by PV. So that is the formula we are going to apply here. So here I am having margin of safety is 30% and PV is 20%. So profit is equal to margin of safety into PV ratio, right? So my margin of safety is 30% into a PV ratio, that is 20%. So 30 into 20%, 6%. My profit will be 6% on sales. So option B will be the right answer. Then moving on to ninth problem. In P, labor force at the beginning of July 2023 was 3,800. And at the end of July 2023 was 4,200. 4,200. During the month, 50 workers left while 80 workers were discharged. 560 workers were engaged, out of which only 60 were appointed in the Vacancy created by the number of workers separated and the rest on account of expansion scheme. On the basis of above information, labor turnover ratio of the firm by flux method is. So we need to calculate labor turnover ratio under flux method. So now I want to calculate labor turnover based on flux method. So formula will be half of number of employees separated. So number of separations plus number of replacements. So in this case we have additions also. So half of separation plus additions divided by average number of employees. So average, how I will be calculating, that is opening plus closing divided by 2, that is 3800 opening, 4200 closing divided by 2. So 3800 plus 4200 divided by 2. So 4000 will be my average. So separation, so total separation here is 50 plus 80, that is 130 employees are separated. So half of 130 plus additions here we have 560 divided by 4000. So 130 plus 560 divided by 2. So I will be having 345. So 345 divided by 4000. So into 100, if I'm taking 8.63 percentage. So option D is the right answer. If an organization has all the resources it needs for production, then the principal budget factor is most likely to be sales demand. So based on sales demand only, we will be factoring everything. So option B. The sum of direct labor and factory overhead is termed as, so direct labor and factory overheads together, that is direct labor plus factory overhead is said to be conversion cost. So option D is the right answer. RST and company has set up a laboratory for testing of products for compliance with standards. So this is for testing. So testing in the sense this is to meet whether the quality is met or not, to check the quality is met or not. So salary of this laboratory staff is part of quality check only. So staff is salary for laboratory staff only we are going to pay. So this is also comes under quality control cost. So option C is the right answer. The company requires 1 lakh units of an item annually. So the cost per unit is 10 rupees, ordering cost 500 rupees per order, inventory carrying cost 50%. So inventory carrying cost I will be getting 10 into 50%. That is 5 rupees. So what does E will give? So root of 2AB divided by C. That is A is annual demand, B is buying cost per order, C is carrying cost. So root of 2 into annual demand, here it is 1 lakh. Ordering cost is 500, that is B divided by C, that is 5 rupees. So I will be getting 2 into 1 lakh into 500 divided by 5. Square root will be 4472 units. So option B is the right answer. 4472 units. Move on to 14th question. Which one of the following method is used for evaluation of equivalent production when price of fluctuating? So when price of fluctuating, we will be using weighted average method. So always remember, when price of fluctuating, we will be using weighted average method. So in the year 2023-24, Exxonco used 2,820 kgs of material or total standard cost of 11,562. So this is what actual quantity. So actual quantity at standard price we will be having 11,562. Material usage variance is 123 favorable. In this case, what is standard weight? They are asking standard weight. So first write material usage variance formula. So usage variance. So there is no need to confuse among the formulas, because if the variance is related to usage, the difference will be usage only. That is standard quantity minus actual quantity into standard price. So here I am having standard quantity into standard price minus actual quantity into standard price. So this is the formula I'm having. So standard quantity I don't know into standard price minus actual quantity into actual price 11,562. This is equal to favor of 123. So then standard quantity into standard price is equal to 11,562 plus 123. So I will be having, so 11,562 plus 123. So 11,685. So now I want standard quantity. So is it possible to calculate standard price here? Let us see. So 11,562 we have as standard quantity. Sorry, actual quantity into standard price. So divided by how many kgs? 2820. So my standard price will be 4.1. So 11,685 divided by 4.1. So 2,850 kgs. So option B. So hope this is clear. So once again I will repeat. So actual quantity into standard price I am having 11,562. So my actual quantity here I am having is 2,820 kgs into standard price is equal to 11,562. My standard price will be 11,562 divided by 2820. So 4.1 will be my standard price. So my standard quantity will be 11,685 divided by 4.1. So I will be getting 2,850 kgs.